let's talk about investing for cash flow, because unfortunately there's a lot of, let's call it poo-poo information out there on the internet when it comes to the topic of cash flow investing, because a lot of people say, oh, if you want to get rich, just get this passive income, create this drop shipping site, start this Amazon store, create this ebook, and you're going to be making passive income, this cash flow. But the reality is, number one, that's not passive, and number two, it is so difficult to generate this type of cash flow. The way that real cash flow investing works for investors and helping people become extremely wealthy with cash flow is like this. I'm gonna draw you right here for my male followers. I'm gonna draw you a mustache, and for our female followers, I'm gonna draw you a braid. In my native language Punjabi, we call a mustache a much and a braid a gut. So now you go to work every single day at this job. Maybe this job is your business, and then this job is gonna pay you a salary. Now you're going to take a piece of the income that you did not spend at Gucci and Chipotle, and you're going to take this money and you're going to invest it into this asset. Now this asset could be something like a dividend paying stock. It could be something like real estate. I'll talk about how you can do this in just a minute, but now you're going to take this money, put it into this asset that's going to be generally passive on your end. Not completely passive, but generally passive. And now that you own this asset, it is going to pay you with cash flow. Maybe you get a check every month. Maybe you get a check every 3 months. Maybe you get a check once a year. Just depends what this asset is. And now you can take this money that you're generating and you can either buy more of these assets that are going to pay you with more cash flow, or you can take this money and use it to go out and buy you a brand new car. That's going to be your choice, but this is how real cash flow investing works. Now, the thing that you need to understand about cash flow investing that nobody wants to talk about on the internet is that you don't get rich by investing for cash flow. You got to be rich first to get a lot of the cash flow that will make you wealthy. The reason why is because you got to take the money that you're earning that you don't spend at Chipotle and Gucci, and then you take this money to buy these assets. So you need the money to generate the cash flow in the first place. And this is why it's so difficult, is because people hear this idea of generating passive income and cash flow, and it sounds very exciting. But the reality is, when you generate this cash flow, you're generating a return on the money that you invest. So let's assume, I'm going to be very generous here. Let's assume that you can get a 10% cash flow return. That's very high, by the way. But let's assume you can get a 10% cash flow return. That means if you invested $1,000 into this asset, you're going to generate $100 after 1 year of cash flow. $100 from $1,000 is not going to really pay you much. I mean, it's not going to fund really anything in your life. Even if you invested $100,000, then you're only generating $10,000 a year. Now, $10,000 a year is a lot, but it's not even $1,000 a month. It's not life-changing money for you to go out and start driving a Rolls Royce. You need the money to invest to generate the cash flow. This is where people say, but Jaspreet, if I need millions of dollars to generate a lot of cash flow, what's the point of me even doing that? Well, the point isn't for you to go and invest into this cash flow asset today and never do it again. The point is you go to work every single day. You get this paycheck every week, every 2 weeks, every month. Every time you get paid, you're going to take a little bit of this money and buy this asset. Now, when you do this week after week after week, month after month after month, year after year after year, decade after decade, now you're going to be building a solid stream of cash flow, especially if you're taking this cash flow that you're generating and using it to buy more assets, because now you're making money to buy cash flow, and the money that your money makes is buying you more cash flow as well. And now if you do this for long enough, now you're going to be able to build a solid stream. Now, the more money you invest into this asset, the more cash flow you're going to be able to generate. And this is why I call it the decade of sacrifice. Because if you put in a decade of time where you're working to live smaller so you have more money here, and then you take this money and you use it to buy these assets that are paying you with cash flow, well, now after a decade of sacrifice, you are going to be able to reap the rewards of that, which is now you're going to finally have a solid stream of cash flow. So if you want to go through this decade of sacrifice, which is not easy, I mean, it's the reason why the majority of people will never become financially successful or wealthy. The majority of people do not want to make this financial sacrifice of you working to live smaller and earn more money, not so you can drive a BMW, not so you can buy all the fancy Gucci, not so you can have a big home, but so you can have more assets. And if you put in that work to own more assets that are paying you with cash flow, now you got the checks coming in every month, every quarter, every year, and now you have this money coming in without you physically working, because remember, you got to work here to get this check. You don't got to work here to get this check. This asset cash flow is coming in passively. The only thing you got to do here is make sure that your assets are still good, making sure that you still own a good portfolio of stocks, making sure that your real estate is still good. All you got to do here is monitor it. Here, you got to go into the office or go into work and keep getting that paycheck, because if you don't work, you don't get that paycheck. Here, if you don't work, you still get paid. But in order to get paid here, you got to keep contributing money here week after week, month after month, year after year for at least a solid decade. And if you do that, now you're going to have a brand new stream of income that can allow you to drive that nice car without worrying about the price. You have the money coming in here that will allow you to go on those vacations and not have to worry about the price. You got the money coming in here to buy the fancy clothes, and you don't got to worry about paying for it because it's your assets that are paying for it. It's not what you are working to pay for. This is how wealthy people really become wealthy, because if you can build this type of cash flow, well, now you have true financial freedom, because now you have assets that are paying for your lifestyle instead of just you working to pay for your lifestyle. This is what it means to become wealthy, because now it's your assets that will fund your finances. Now the question is, what are these assets that you should be investing in? By the way, if you do want to stay up to date on what's happening in the top finance and business news, because you want to be an investor, well, then you can join something like Market Briefs. Market Briefs is my free financial newsletter that I created to help investors stay up to date on what's happening in things like the housing market, the stock market, the economy, and everything in between. It's a completely free newsletter. If you want to join Market Briefs, I got the link for you down in the description below, or you can go to briefs.co/market. That's briefs.co/market. So what are these types of assets that you can invest in? That way you can generate this type of cash flow. Now, I'm going to go over mainly two types of assets. I'm going to talk about stocks, and I'm going to talk about real estate, because these are probably the two most accessible ways for the average person to generate this type of cash flow. When you go out and you invest in a company in the stock market, what you're doing is you're literally buying a business. If you go out and you buy one share of the Amazon company, you become one of the owners of the Amazon company. If you go out and you buy one share of the Apple company, you become one of the owners of Apple. If you go out and you buy one share of Chipotle, you become one of the owners of Chipotle. If you go out and you buy one share of Sweetgreen, you become one of the owners of Sweetgreen. You get the idea. Now you're literally buying one of the pieces of ownership in that business instead of just buying a product that this business sells. Most people just think about businesses as their products. You go and buy things on Amazon. You buy the newest iPhone. You buy a Chipotle bowl. You buy a Sweetgreen salad. That's how most people are wired to think. When you go out and you invest in a stock, now you're actually buying the business instead of the product. Well, some companies in the stock market, not all of them, but some companies on the stock market pay what's called a dividend. A dividend is a cash payment that you get as an investor for doing nothing except owning the stock. Now again, not every company pays out a dividend. And the reason why is because for a company to pay out this dividend, they have to have a big profit. So now when a company makes a profit at the end of the year, there's three things that they can do with this cash. Number one is they can save this money in case of an emergency. Number two is they can reinvest this money back into the company. Or number three is they can just give it away to you, one of the shareholders, one of the owners. Now, when it comes to saving the money in a company, you got to think from the perspective of a business owner. If a company makes $100 million of profit and they kept $100 million in their bank account, well, that's dead cash sitting there. Not every company wants a ton of dead cash sitting there because the $100 million isn't generating a return for the company. Companies want to do something with their money, or at least give this money to their owners. And so if a company has a big enough bank account or a big enough savings account, they might not want to save more money, which then brings us to option two, which is reinvest the money back into the company. Now, if it's a smaller startup growth company, you bet they're going to want to invest all of this money, maybe and some more through debt and other investment money back into the company because they want to grow bigger. They want to expand their market share. They want to be a larger company. And when a company is trying to grow, they're going to be investing everything that they can to open new stores, open new manufacturing plants, open new research and development facilities. That way they can keep expanding and growing their market share. But when a company becomes even bigger, and now you're a much larger conglomerate, and you don't really see that opportunity to keep investing and growing as quickly, now you might not want to reinvest all this money back into the company, which leaves now this cash back in the bank account. And if you don't want to just save it, well, then you can give this money away to the shareholders, people like you who own a piece of the stock. Now, this is called a dividend. And companies that pay a dividend generally pay out this dividend quarterly, meaning every 3 months. So now, if you buy a stock that's paying a dividend, that means you're going to get a cash payment every 3 months for doing nothing except owning the stock. Now, does this come with risk? Of course. If you invest in a company on its way to bankruptcy, well, eventually they might cut that dividend, or they'll have to cut that dividend. Plus, you could also see the value of that stock fall. And this is where you have to understand how to value an investment and know how to research a good stock. And you might be saying, but Jaspreet, I don't want to do all that. I don't want to keep up with the company. I don't want to research the stock. I don't know how to do that. I don't want to research the financials. That's okay. You don't have to. The alternative to investing into an individual company is to invest in something like a fund, maybe a dividend-paying ETF, a dividend-paying index fund, a dividend-paying mutual fund. Now, instead of investing in one company like, let's just say, Apple, now you can invest into a basket of companies that have, say, 500 different companies in here, and Apple is just one of the companies, and there's 499 other dividend-paying companies in here. So now you can go out and find these dividend-paying funds. Again, you have ETFs, mutual funds, index funds. You go out and find one of these dividend-paying funds that invest in companies that are paying a dividend. Now you invest in one thing that's investing in 500 different companies. Now you can lower your risk, because if Apple were to go bankrupt, well, now you have 499 companies to balance it out. This way you can lower your risk and keep getting those dividends that way now you can just keep throwing your money into one of these funds. So this is option one. You can invest into an individual company. I am not telling you what to invest in, just giving you an example. You can invest into an individual company that's paying a dividend, or you can invest into a fund that's paying a dividend. But again, the key is you got to just keep reinvesting that money. Option number two is you invest in real estate. Now you're going to go out and buy a property. Maybe it's a house, maybe it's an apartment complex, maybe it's an office building if that's something you're into, maybe it's a retail building, maybe it's a mixed-use building, maybe it's a storage building. You're going out and you're buying this property, but you're not buying it to live in or use yourself. You're buying it to rent out to somebody else. So now you buy this property, you rent it out to somebody else, maybe they'll live in or use this property, and then in exchange for them living in and using your property, they pay you rent. Now the key here is this rent has to be enough to cover your property taxes, your insurance, your maintenance, your management fees, any vacancy costs, and then if you have any debt, cover that as well, and then put some money in your pocket each and every month. That's the right way to invest in real estate. You have some people, especially when you're in a very hot seller's market like we've been seeing, when you're in a very hot seller's market, you will see investors go out who have a lot of cash, just go out and buy properties and say, you know what? I'm okay losing money every single month because I think this property is going to be more valuable next year. So I'll be able to flip it for a profit. That's not the game that I play. That's too risky, that's too speculative because I have no idea where housing prices or real estate prices are going to be in a year. I don't like to play that game. What I like to do is I want to make sure I can make a profit in my cash flow every single month and just keep working to accumulate the cash flow. I just want to keep stacking the cash flow because now I know, okay, this property is going to make me $250 a month. If this property is going to make me $250 a month, I got to buy a second one for another $250 a month. After 10, I got $2,500 a month coming in profit. After 100, I got $25,000 coming in profit. And now it's a game of just stacking cash flow and how fast can I stack that cash flow. Now again, you don't have to be a real estate investor. You don't have to invest in stocks, but you have to start putting your money to work if you want to start generating the cash flow. There's some people on the internet that say that the only way to build wealth is to invest in real estate. Well, there's a lot of people that have become extremely wealthy without ever touching real estate. You have some people that say you have to go out and invest in the stock market if you want to be wealthy. Well, there are some investors that only invest in real estate that have never touched the stock market that have become extremely wealthy. What you need to do is find the right balance for you. Personally, I invest in stocks and I invest in real estate. It's just something that I'm interested in. You don't have to go out and blindly follow anybody else. You don't want to be a sheep. The idea is for you to go out and build your financial education, learn how to invest, and find the right strategy that works for you, that works for your family, and that works for your financial goals. Because at the end of the day, if you want to invest your money, you just want to make sure you get the best returns. For me, I like cash flow because cash flow is something that I can predict. And when I got the cash flow coming in, well, now I know I can go out and spend my money, at least the cash flow that I'm generating, and not really have to worry about it because even next month, I'm going to get another cash flow check. That's the way that I like to run my finances. So if you want to invest your money, you got to figure out the right strategy for you. And well, this goes over a couple ways that you can invest your money for cash flow. Your 20s are a time when you first start making money, and it's very common and normal to be dumb with your money because well, it's the first time you ever make money. So now you want to go out and buy the nice things. You want to start spending money. You want to start going on vacation. You want to start buying a nice apartment. You want to get a nice car, and you want to just start exploring and enjoying life because you're finally out of school and you're finally making some money.